All right. I really should make videos like every month or so as opposed to making it every 3 months. But in any case, so here are the trade alerts that were sent to the alert students. If you enroll in the alerts, they're going to look exactly like this. You can enroll at beststockstrategy.com/memberships. That is beststockstrategy.com/memberships. And the alerts are sent via WhatsApp. The best way to utilize and learn from the alerts is to try to replicate my methodology or my way of thinking and ask yourself why I made this trade. And you can go back and you can look at the securities that I traded and see what they were trading at that specific time and try to replicate my thought process. I think that would be very valuable. So anyway, let's get to it. January 4th, the market is up, but volatility is also up. That's not a good sign. Here I rolled Snow. You can see I rolled it from February all the way to May, from 277.5 to 235. So in this situation, as I demonstrated in the prior video, initially I was short like the 430 or the 440 call option, and then I eventually rolled up the put option, I think, to like 370, but then I had to roll it all the way down to like 235. So I got whipsawed and whiplashed by this, and I had to find a way to make money on it regardless. And you'll see in my additional trades with Snow how I was able to roll and manage this position so that it was profitable. I think the big takeaway here, and I also had a similar situation with Tesla, is as long as you trade small enough, you should be able to win close to 100% of your trades. The problem arises when you get into a margin call or you're strapped for buying power where you have to close out the position at a loss because the position moves too fast, too soon, and the actual move is greater than the expected move. So when we sell options, we make money typically because the actual move is less than the expected move. Additionally, we make money from theta decay, which is the time decay. But you have to be able to make money even when you're wrong, when the actual move is more than the expected move. And I think that's the hallmark and the mark of a successful trader. And one of the most important aspects of being a successful trader is not trading too large. I want to make 15% every single month too, but I found from experience, and I've learned the hard way, that if I try to make more than 3.5% a month, if I try to target more than about 3.5% a month, then it leads to significant portfolio volatility and it leads to a lot of unnecessary stress. So that's my target, about 3.5% a month. All right, let's get going on the actual alert. So here you can see I rolled it forward by a few months and then I was able to roll it down by about $42.50. Then I sold a call on Tesla. Actually, this position ended up getting challenged too. Not significantly, but then later on Tesla increased about 18% in 2 days. So yeah, I can see I was a little bit stressed out with Snow and then Tesla. All right, PDD, bought that back, closing trade. So here with Tesla, I opportunistically turn this into a Strangle. PDD, closing trade, PDD. That's the original. Amazon, B plus grade. Amazon was down $70. Facebook, B plus grade. Market fell 55 points. VIX was up 17%. Okay, so actually I bought back the Tesla call. So I sold it for 237 and then I bought it back for 133. So that actually wasn't the position that was problematic. But the problematic position is coming because I remember it well. All right, so here I mentioned sliding back the expiration from May. And then as you'll see later on, I actually slide back the expiration from May to February 26th, and then I close it out early. I think I closed out Snow last week, like pretty much the first week of February. Microsoft. So, but I do think it's important because remember that here with Snow, I rolled it all the way to May, okay? I think the reason why it doesn't load ASAP, the pictures, is that I delete the pictures and it's not saved on my phone. So maybe it has to like access it from the WhatsApp database. But in any case, it is kind of annoying that it takes a second for the pictures to load. But the big takeaway here is remember that I rolled it all the way to May. Okay, so that's going to be relevant later on. Okay. So here, Facebook, Tesla, Microsoft, another Microsoft. Both trades are B pluses. Closing trade on Amazon, sold it for $3.60, bought back for 20 cents. New opening trade, B plus grade. I should have done that larger. I picked up about $1,270. That's a lot. Tesla, $1.27, B plus grade. Amazon call, picked up $1. Opportunistically turned it into a strangle. I'm having problems saying that word late because it's 10:30 at night and I'm a little bit tired. So for some reason my verbal communication skills are not as good. So here I'm sharing my thoughts regarding ways of rolling back that position so that I can decrease the expiration, because I don't want to hold on to a challenge position. One, it's stressful to have it in my account, but additionally, I also don't want to be reminded of it. So I want to roll it out of harm's way, but then as soon as it stabilizes, I want to try to find some ways to get rid of the position without taking a loss. And actually with this position, I ended up taking I ended up making, I think, about $600 or $700 on Snow. But was it worth it? No, it wasn't. All right, here's Tesla. I rolled it from 820 to 890. Closing trade on Tesla. Sold it for $3.70. Bought it for 10 cents. Okay. All right, so here's actually the Tesla position, okay? So for some reason it just like happened very rapidly. Okay, so it must have been January 8th. Okay, so Tesla went up a lot, and what happened in this situation was that I think Tesla was trading at about like 814 on the Thursday before. So I figured, and also the option was trading at about $10. So I figured that Tesla the day before had gone up about 14%. Okay, VIX up 55. Let's see how things play out tomorrow. Okay, so we have the 820 call expiring tomorrow and has a $4 safety net. So there's a $4 safety net. So Tesla was trading at about 816, and then additionally the option itself was trading at about $10. So I had a $14 safety net. I figured that on Thursday Tesla had gone up about I think about 8%. But I thought that there was a decent probability that on Friday Tesla would retrace some of its gains from Thursday. So I had a $14 safety net. I had $4 was the difference between the strike price and the current market price on Thursday. And additionally, the option was selling for $10, but the option was expiring the next day. So there was $10 of extrinsic. So I had $14 of safety net. Then on Friday, January 8th, Tesla opened up about $30 or $40. So immediately I wanted to roll this position because I didn't want it to be that far in the money. So I bought back the the 820 and then I rolled it to 890 and then I financed it by selling a 740 put and I collected about $92 for that. Okay. And then this position executed about four minutes after the market opened. Rolled the position. Then I bought back a put option. Okay. Then what I did for Tesla was I rolled the existing 525 puts to 640. And I used that credit in order to increase the strike price by $10. Was that a good trade? No, not really. I mean, I pretty much give up, I assume, significantly more risk just for increasing the strike price on the call side by $10. I don't think that was a good trade. Did it work out? Yes. But was it a good trade? I don't think so. I mean, anytime you're going to give up $85 to, and for 3 contracts, so significantly more risk just to pick up $10 of call premium, I don't think that was a good trade. Roll the 880 to 890. So I have 2 of the problematic 890s and I finance it by rolling up the profitable puts while also closing out the existing put contract for a profit. All right. Then what I did was I closed out the 880, which was expiring that day, and I sold the 635. So this actually was a good trade. So at this time, Tesla was trading. I think it was probably trading at about 840, but I just didn't want to take a chance. So I closed out the 880, which was expiring later that day, and I closed it out by selling the 635. And I figured that I'd rather be long Tesla by selling the 635 put than being short Tesla, considering how much it had gone up over the past few days. So then I closed out the 400 for 42 cents, sold it for 370 and bought back for 40 cents. So I made a mistake. I sent the wrong trade, but sold for 264 and bought back for 10 cents. So to summarize, the positions to watch are 2 of the 890 calls that expire next week, and those are the problematic ones, and 1 of the 1020 calls that expires in 2 weeks. Snow is no longer an issue, so that went up, which helped a little bit just to reduce the stress, because when you have challenged positions, you really don't want to deal with the mental anguish and the stress of having to manage them. All right, so here's the kicker trade where I flipped the position and I just figured, okay, I'm just going to flip it from short calls to being short puts, close out the 890 that are due next week, and sold puts to finance it. This would be a lesson why it's important to leave a lot of buying power. We win virtually all our trades, but what happens when a stock goes up or down 20% in 2 days, actually? What happens if the market falls 20% in 2 days? So, hey, let me just be clear with you. You can win almost all your trades and still lose money, because if the magnitude of the losses offset your winners, then there's no guarantee that you're going to make profit. And I think that one of the huge takeaways is that you have to make sure that when you have a losing position, when the actual move is greater than the expected move, that you still find a way to make money and to be profitable. And in this situation, I was able to buy back 2 calls and flip it to 5 puts. And you need to make sure that you have the necessary buying power, or else you're going to be forced to close out the position for a large loss. And we made money on both Tesla and Snow, but if I didn't leave ample buying power, I would have been forced by my broker to close this position out for a loss. All right, so let this be a lesson why it's important to leave a lot of buying power. What has happened with Tesla is extremely rare, but if you're going to be consistently profitable in all market environments, you need to be able to deal with all situations profitably. If you don't leave enough buying power, if you get too stressed out, or you don't evaluate the situation objectively, then that's definitely something to work on. I mean, look, I've lost money before as well by making bad trades, so I'm not immune to it. It's really just a learning experience. You have to learn and be committed to constant improvement. Um, yeah, I mean, that's really what it comes down to. But I think that by learning and studying these trades, you're able to improve your own trading. Again, Tesla's gone up almost 20% in 2 days, yet we have handled the situation well. Imagine the market dropping 20% in 2 days. This is why it's important to stay small and not take all your winners for granted, because a few times a year you'll experience a situation like this. Here are the Amazon calls that we made money on. So we made about $850 there. Snow is in a good spot. It's just a waiting game. Same with Tesla. We can always roll the Tesla puts down if necessary and then flip it in case of a crash, where we buy back the short put, then buy in at the money put and sell in the money put, and then sell short-dated calls against it. All right. Bought back Facebook. The original trade is there. So we kept 50% of the premium. So here I say that we're going to be a little less aggressive on the call side because we have Snow and Tesla. So we want to focus on more higher probability trades until those two trades are cleared. S&P is down 26. New opening trade on Facebook. So here you can see with Snow where we start dialing back and rolling back in the expirations, okay? So here we rolled it from May to March, and we picked up a credit. So we rolled it in by 2 months. Increased the strike by $20, but I decreased the duration by 2 months, all right? Because I don't want to hold on to it. Tesla, I also bought back the 1020, and then I sold the 617.5. I flipped the Tesla call, picked up a credit of 72 cents at $72. Actually, that was really weird because it made a mistake. You see how it says limit credit here, 72, but then it says limit debit. That's really weird. But then it corrected itself. I've actually never seen that happen before on E-Trade, but it happened there. So my justification for this was that I'd rather be short a Tesla put at 617 than short a call, so I made the adjustment. Sold Amazon puts. I definitely should trade that larger, $7.20. That's amazing. Closing trade from Microsoft. Picked up a little less than 50%. New opening trade on Facebook. B+. Was having problems logging into E-Trade. Microsoft bought that back. So sold it for $1.23, 50% profit in about a week. Facebook, B+ grade. MasterCard, B+. MasterCard, B+. Amazon, A-. So when you see an A- trade, I definitely should have gone larger here. $700 is safety net. And Amazon was oversold. Okay, so here what I did was I wanted to decrease the expiration, so I rolled it from the 550 to the 610, and then I contracted or decreased the expiration by about a month, about 3 weeks or so. So rolled the March back to February by increasing the strike. I can always roll it back if necessary, but I want to reduce the duration. Okay, high B+ grade for Amazon. Okay, so here's what I did with Snow. So I managed Snow. I decreased the duration by 3 weeks and financed that by increasing the strike by $10 and selling a short-dated Strangle that expires next Friday. So basically, as long as snow stays between 257 and 375 by next Friday, then all is well. And if snow goes up a lot, then it'll help us too, since we have 2 puts in the position. If next week's position expires, then I may try to reduce the 265 strike on the February 26th, but we'll see what happens. All right, so I bought back the March 19th. So originally this position, remember I rolled it out, I think, to May, and then I sold the 265, and then in order to finance that, so I only would have to increase the strike price by $10, I then sold the 1 week 257 put and the 375 Strangle, and this filled for 24 cents, and this turned out to be a good trade. So remember, I reduced the duration from May all the way to February 26th. Okay, bought back Facebook, closing trade. All these Facebook trades were closed for large profits. New opening trade for Amazon. Collected $920 for that. That's a pretty good trade. Although I think this trade actually got tested as well. New opening trades on Facebook, because Facebook fell below 250 at one point. Oh, actually, no, those were, sorry about that. Those are actually the original trades. So these trades, they closed out, but here were the originals. I rolled these up a bit, so I increased the strike from 24 to 25.60, and I picked up close to $500. Here I increased the strike from 24.80 to 25.90, and I picked up about $272. Closing trade. So this is an important message. As a result, it's important to trade small so that we always have an opportunity to manage the position. So here I rolled up the call side by about $20, and I financed it by increasing the put side. And I collected a small credit. Picked up an extra $200. Closing trade on Microsoft. That's the original. Rolling the existing positions to pick up more premium. Picked up an extra $184. New opening trade, low B plus. Here are my thoughts on GameStop. See, selling the 115 call was a gamble. But had I made it the trade, then I would have closed it out right now for a nice gain. But it's still gambling. And as people saw when GameStop went up, I think to about like 480, selling calls was not the right move. The market was acting weird around this time too. So you can see I commented on it. The market is acting very strangely. VIX is up 13%. See, the market is relatively unchanged, but the VIX is up 10%. So that was very weird. Today was very strange. A lot of intraday volatility. So Fiverr. So what I did here was I bought back the February 26th, and then I financed it by selling the 255 and then also reducing the strike price on the February 26th to 255. So I sold another put option February 5th with a strike of 255, and I was able to reduce the strike price on the February 26th from 265 to 255. I rolled Snow down and financed it by selling a put for next week. I have a 257.5 put that expires this Friday, so I need to be cognizant of that just in case it gets challenged. Then I sold a put on Amazon. This would be plus grade. I should have traded Amazon larger. Here I sold a put on Facebook, B plus grade. Tesla, 255, new opening trade, B plus. Bought back Facebook, held for less than a day, about 35 trading minutes. It must have reported earnings. That's the original. Volatility is down 20%. Closing trade on MasterCard. Sold it for 88 cents and bought back for 28 cents. New opening trade on Facebook, B plus grade. Nibble on Amazon, collected $760, B plus grade. Facebook, so here I rolled the existing Amazon position from 3 to 2 and picked up $340, rolled it out to next week. High B grade. Rolled this up too, picked up $142. That's the original. New opening trade, high B. It's for Facebook. Rolling trade, Amazon has been going up a lot recently, and I think that there is more potential to the upside than the downside. So I wanted to give more safety net to the 3760 call. So I rolled the 3760 call to the 3870. So I gave myself an incremental $110 of safety net, and I financed it by selling the 2630 put option. It's a high B roll. And then here's my justification. It basically makes me feel a little more comfortable. Plus I want to be more conservative on the call side after the craziness that's happened with GME. Your portfolio may be at an all-time high. We've had a good start to 2021. Sold for 85 cents and bought back for 32. So I rolled 3 of the existing 5 Tesla positions from 610 to 650, and I picked up an incremental $360. Closing trade, I think we picked up around 900 for this in total. Yeah, so we sold the original at 24, then we rolled it up to 25.60, and then rolled it again to 26.20. So we collected about 900 in total and bought it back for around $45. So since I did 2 contracts, I made about $1,700 on this net. Okay, so I bought back Snow. Closing trade for Snow. I think I made about $600 net on Snow. Was it worth it? Definitely not. But if you're a member for a while, then I highly encourage you to study this trade, because we rolled Snow from 440 calls to the 255 puts, and we made money. So we were able to bend with the massive volatility and still manage the position. I may do a YouTube video on it because it's very educational. Fiverr, I bought it back for 40 cents, sold it for $1.10. pins. So I opened a new trade on Amazon. I closed out pins because I was able to capture 10% profit in a few hours. Tesla, low B plus grade. Picked up $435. New opening trade on UNH. Low B minus trade. That's not a good trade. I shouldn't have made that trade. It's just a very poor grade. Closing trade on Facebook. Held it for about a week. Closing trade on Amazon. I think we collected over $1,000 per contract on a net basis. So 2 contracts, about $2,000 of profit. New opening trade for UNH. This grade is better, about a B plus grade. So opportunistically turn the Amazon puts into a strangle by selling the call side. Amazon sold the 350. Then I sold PayPal, high B grade, simply because PayPal seems overextended. The market seems overbought, and that's it. So if you have any questions, let me know. Leave a comment below. Please like, comment, share, and subscribe. And I highly recommend joining the trade alerts. You can join for 7 days. It only costs $19. You can join at beststockstrategy.com/memberships. That's beststockstrategy.com/memberships.